Today, we're going to continue discussing Tesla's earnings report and the market's reaction to it. Tesla's stock is down about 10% after the earnings report, and the Nasdaq is down over 2%, which is not helping either. There are a couple of things we need to look into further, including details on FSD transferability. It's worth noting that we're also heading into the Nasdaq 100 rebalancing, which may be influencing the stock's performance. The top-weighted stocks in the Nasdaq 100, except for Apple, are underperforming the Nasdaq overall due to the rebalancing. While Tesla's earnings likely played a part in today's results, there could be other factors contributing to the decline. We need to reevaluate the earnings report to see if there's something we missed or if the results were worse than expected. Let's dig into it and see what's going on. Let's take a look at the analyst reactions to Tesla's earnings report. It seems like most of them are positive, which makes sense since the numbers were better than expected. For instance, Dan Ives increased his price target to around $350 per share, comparing Tesla's position to Apple's back in 2008 to 2009, when Apple started to monetize its services and ecosystem.
Wedbush Securities analyst reiterating a buy today, raising his price target on Tesla to $350. So you actually raise, even though the stock is down and the market's worried about more price cuts. Why?
I think investors aren't seeing forest through the trees because ultimately what's happening here, we're seeing a stabilization from a margin perspective, better than expected in terms of auto gross margins. You look at units, right now I think on a trajectory toward 2 million, and then this is the drum roll, the Super Bowl, to now what I believe is monetization of supercharger, battery, and I think last night the biggest thing from the conference call, FSD talking to another OEM, because this from an AI perspective is ultimately how I see Tesla getting to $1.5 trillion, $2 trillion market
licensing
cap.
FSD to another OEM. I mean, he said early days. It's never clear. We got no clarity on who it is or how far along or whether it may even come to fruition.
But ultimately, this is, for Musk, I think ultimately this is really the first step of what's going to be a broader strategy because they've built it. I mean, if you look at FSD,
full self-driving,
and I'll argue, Sarah, that's AI. I mean, we could talk. It's basically AI for automakers. You look at full self-driving, you look what happened with superchargers, and ultimately now batteries. And I think the story's stabilizing from a margin perspective. The poker move massively played off from a unit perspective. And I think that's why this year, I think this is just the start.
The poker move being lowering prices.
Because if you look at the lower prices, sacrificing prices for demand, it paid off, not just in China, in the U.S. And I think what you're seeing right now with EV play out, you're starting to see this green tidal wave we viewed as the biggest transformation to the auto industry since 1950s. It's Tesla's world. Everyone else is paying rent. And I think last night was just another chess move while other automakers sit there playing checkers.
What about the factory potential delay of shipments? That was something that was flagged on the call.
Yeah, and
is that a big deal?
Yeah, and that's one where, and to your point, a bit of a downtick, production offline from a manufacturing perspective. See, I view that as really what's going to be the start of a refresh for Model 3s. So I think that's a smart move because you're going to have refresh of Model 3s, you got Model Ys, and then ultimately the Cybertruck, we think production starts around Halloween. I think we will start to see Cybertrucks on the road in the month of December.
You do? And do you think people are actually going to buy them?
I think right now, if I look just where price points are and just what demand looks like from pre-orders, this could be something where ultimately it's $200,000-300K per year as it starts to ramp in terms of Cybertruck. And that's why Austin, if you look at what Tesla's done, Austin, Berlin, of course, China, what we see now more and more, what will be coming out of India and others, they got the scale and scope where no one else has. And I think that's what's starting to play out here. I view Tesla, it's Apple, 2008, 2009 in terms of the story playing out.
I mean, you know, some of our viewers, you've been right, by the way. I want to make that clear, and that's the most important thing. But people say you're just a permabull. Is there anything that this company could do that would change your opinion?
Yeah, and to that point, like if we start to see like massive demand issues in China, more price cuts where margins get cut and you start to get to 13, 14, 15% margins, then that changes the thesis. But David, to my view here is that we are in the first, second inning of just a massive transformation in this fourth industrial revolution, not just in terms of electric vehicles, but I believe also when it comes to Tesla, it's the AI story. I think the sum of the parts story, I view this as an AWS moment, similar to what we saw with Amazon, AWS.
You said it.
That's starting to happen now. Supercharger, battery, AI.
Despite some positive aspects in the earnings report, people tend to focus on short-term challenges, leading to a drop in the stock price. However, there are plenty of reasons to feel good about Tesla's business, and I remain optimistic about their future. One thing that has been pointed out is the impact of other income on Tesla's earnings. In the second quarter, this line added $328 million to their net income, mainly due to foreign exchange movements on certain intercompany balances. It's worth noting that this is a one-time benefit and is not likely to repeat in the future. Considering this line item, my forecast for Tesla's earnings was a positive $10 million benefit, but the actual result was a much higher positive impact of $328 million. This difference drove an increase in earnings per share that was unexpected. The non-GAAP net income was $3.15 billion, beating the analyst consensus by $369 million. So, while there are some valid criticisms of Tesla's earnings report, overall, there are many positive aspects to focus on for the long-term outlook of the company. So, here's the deal. Let's talk about the analyst consensus for a specific line item in Tesla's earnings report. It's called Other Income, and it's not really getting the attention it deserves. This line item had a significant impact on Tesla's earnings, adding about $328 million to their net income this quarter. But here's the thing. It's not likely to repeat in the future, so we shouldn't overly focus on it. Now, some people might say, oh, almost 90% of the beat was because of this other income. Fair enough, but we didn't hear anyone talking about it when it had a negative impact of $175 million over the last 3 quarters combined. So, let's keep things in perspective and consider all line items that contribute to the bottom line, like regulatory credits. Speaking of which, Tesla saw a big decline in regulatory credits this quarter, offsetting some of the benefits from other income. But even if we remove all these complexities, Tesla still beat expectations, and that's a good thing to keep in mind. Now, moving on to the earnings call. People are saying that the stock took a hit after the call because Elon Musk focused more on long-term vision rather than short-term margins. But come on, Elon has been doing this every quarter. Sure, it might not always help the stock trade the next day, but I agree with his approach. He's all about managing and operating the business for the long term, and that's what matters in the grand scheme of things. In the end, let's not get caught up in the short-term noise and look at the bigger picture. Tesla's earnings report has some positive aspects. Let's dive into the FSD transferability news. If you currently have FSD and you buy a new Tesla before September 30th, 2023, you can transfer the FSD to the new vehicle without needing to do a trade-in. It's pretty flexible, allowing you to upgrade your car and keep the FSD value. This could create more demand for upgrades, even during a quarter where Tesla might have some downtime. In other news, Tesla is opening a large facility in New York for parts distribution and service. It's great to see Tesla investing heavily in service centers across the US to improve customer experience.